Thanks very much, Trevor, and welcome to this presentation on Endeavour. I'd like to dive right into things here. We have some exciting new projects that we're building into mines over the next couple of years to drive organic growth at Endeavour. So the title of our slide is basically Building New Mines, Boosting Production, Reducing Costs. Shown here on the cover is the new El Compas mine, which we started commissioning in April, and we're in the final stages of commissioning the mine here in September. So I am obligated to remind you of our forward-looking statements, so you're duly cautioned. And a quick intro, as many of you are familiar with the company. Endeavour is now a mid-tier precious metals producer, and we're guiding production in the 6 million ounce silver, 60,000 ounce gold range this year for about 10 million ounces of silver equivalent production. Our core assets are 4 high-grade underground silver gold mines in 3 historic districts in Mexico. We do make strategic acquisitions from time to time. El Compas is the most recent example, acquired in 2016, commenced development in 2017, and we're looking to declare commercial production before year end. We also bring to the table our operational excellence. Basically, when you buy small mines in historic districts that are in desperate need of expertise and money, to restart and then ultimately modernize and expand, you need good operating people on the ground. And the core of our model is actually going into these historic districts and restarting exploration. So we've had a great run of brownfields discoveries to reactivate and bring to production these 4 mines. So clearly our focus is back on growth, building new mines to drive organic growth over the next 3 years. All of our core assets are currently located in Mexico with 4 operating mines and a 5th development project, Terronera, that we're actually hoping to make a production decision on before year end. You can see the head office in Vancouver and an exploration office in Chile. So everything we've done since I started the company, and from a production point of view, with the gold in the gold bars, the silver in the silver bars, and the silver equivalents in the red bars. So we had 10 fabulous years of rapid production growth. When the bear market hit in 2012, we then backed off on our production and focused only on costs. And of course, with what we think is the resumption of the gold-silver cycle, we've now made the decision to grow our production once again. We've been successful in reducing our costs per ton, cash cost per ounce, all-in sustaining cost per ounce. We had a little bit of a bump up last year. We think that was temporal, and we're back basically driving our costs down. Just a reminder that building 2 new mines at El Compas and Terronera also has a very beneficial effect on our consolidated costs. We fully expect after Terronera is up and running to have our consolidated all-in cost down below $10 an ounce. So some recent highlights. Our first half production was up year on year. Obviously revenues were up, EBITDA was up. Excuse me. We did just a week and a half ago release an updated pre-feasibility study for mine number 5, the Terronera project in Jalisco State, with a jump in NPV up to $118 million and an after-tax IRR of 23–24%. So that new study actually shows the project is capable of higher revenues, higher EBITDA, higher free cash flow, longer mine life, lower costs. The costs are a real highlight here. I think you'll see when I get to that section that Terronera's costs should be amongst the lowest in the entire silver sector. We have announced this year repeated exploration success to grow the Terronera ore bodies, of which there are currently 2. We announced an ATM financing so that the equity tranche for production financing at Terronera is taken care of, and we just recently initiated some company-wide cost cutting. Short-term cutting costs just to reflect the low price environment that we're in through year end. So higher production, lower costs. You can look at it on a first half, second half basis as well. Let's have a quick tour of the mines. Our first mine at Guanaceví in Durango State is the only bullion producer. So this is a shot of the leach plant, and it's also our largest silver producer. We control the west and north ends of the 5th largest silver district in Mexico at Guanaceví, shown in the black properties. And we're currently operating 2 mines, Santa Cruz and Puebla del Norte, feeding a central plant just south of the town of Guanaceví. Guanaceví is the one that's giving us a headache right now. It had been one of our most profitable mines for many years, but in the last 2 years it started losing money, largely due to some operating issues that were out of our control, plus the fact that it's our first mine, so it's also our oldest, deepest, and most expensive mine. We think that simply by opening 2 new ore bodies, starting actually October 1st, and the second ore body opening up March 1st, that those 2 new ore bodies being shallower and higher grade than the current ore bodies, which will expire next year, that will completely refresh not only the operational performance of Guanaceví, but the financial performance as well. So we have been losing money in the last year and a half, but we fully expect a return to profitability at Guanaceví. Bolañitos and Guanajuato, this is the second largest historic silver district in Mexico. It's also been our lowest cost mine for many years, literally our cash cow for almost a decade. We made some discoveries in 2008, 2009, and have basically been living off those discoveries ever since. So the Bolañitos properties in the map are the reddish color in the northwest end of the Guanajuato district. And our third mine, El Cubo, are the blue properties in the southeast end of the Guanajuato district. Operating performance at Bolañitos, you can see the cash costs are basically zero, so the gold effectively pays for the silver. And even on an all-in basis, the costs here are $8.50 in the first half. El Cubo, this one was quite a challenge. We bought it at the top of the market and rode it all the way down in the bear market, all the while trying to turn around the operating and financial performance. It has, however, been our cash cow in the last 3 years, and in fact, in the first half of this year, was lower cost than the Bolañitos. So again, the southeast end of the Guanajuato district, underground mine, and you can see the cash costs at $2.50 and all-in sustaining costs at $10.50. So this has been a good mine for us. It took some time to turn it around, but now it's a core asset. And last but not least, the development project, Compas, is now up and running and in the final stages of commissioning. This is our smallest mine, and it's a gold-dominant mine with a silver credit. But we do control the south end of one of the largest districts in Mexico, Zacatecas, with the historic ore bodies, ore-bearing veins shown in the red, and our properties in the gray. We recommissioned a government-owned plant. We have a long-term lease on that plant. I think our lease rate is like $7,500 a month, so I pay more for the head office than I do for the plant. And this mine is now up and running. So we're looking to declare commercial production before year end, and we haven't published any operating stats yet, obviously, but based on our preliminary economic assessment, it came to us with a very low capex, about $11 million. It was less than a year's development schedule, and we're forecasting cash costs of about $9 per silver equivalent ounce, and all-in costs of less than $10 per silver equivalent ounce. So we're looking forward to adding this as an accretive addition to not only our operating base, but our cash flow. And some shots of the final commissioning. So I'm going to spend basically the rest of the talk on Terronera. This is our Terronera project in Jalisco State. And excuse me, it has the potential to become not only our largest, but our lowest cost mine. We have an entire district of veins that we acquired in 2010 under option and exercised the option in 2013. We've made 2 material discoveries. The largest by far is the Terronera vein discovery, but there's a very, very high-grade second discovery in the La Luz vein shown on this map. And the surface layout here is that roads are in green. There's 2 towns, San Sebastian to the south of the mine, Santiago to the north of the mine. We're actually deriving some of our workforce from those towns. And so you can see the Terronera mine, the La Luz mine, the proposed plant and tailings sites. We've actually purchased all the land needed for the mines, the plant, and the tailings, and we're just in the final stages of permitting. So this is a snapshot of the Terronera vein showing the Terronera ore body. The color coding is basically grade thickness, and you can see that almost the entire vein makes ore. It's still open at depth, and we're still drilling it. In fact, if we take a harder look at that longitudinal section from a grade point of view, this is the grade distribution in silver equivalents. And basically all the colors on the upper slice, which is the Terronera vein, make ore except for the blue, which is low grade, and the white, which is mined out by the Spaniards. So a pretty high grade ore body. It averages almost 400 grams of silver equivalents throughout, and several much higher grade portions. La Luz is spectacular. La Luz, the lower part of this slide, is purple, by the way, is a 600 gram cutoff. So the entire ore body is actually averaging about 1,000 grams silver equivalents, and it'll be the sweetener for our plant. That's just the production profile. You can see a ramp up. It'll average about 5.1 million ounces of silver equivalents per year for almost 10 years. And there's 7 years where it'll be producing well over 5 million ounces silver equivalents per year. The grade profile in the line above it, the blue line, shows that the grades will peak at 460 grams silver equivalents. So the PFS we released 2 weeks ago, in comparison to the one from a year and a half ago, basically across the board we've shown significant improvements. Longer mine life, higher grades, more production, but obviously better revenues and EBITDA and free cash flow. And I've already touched on the NPV at about $118 million and the after-tax IRR at about 23–24%. What really makes this go, though, is the costs. Not only the cost per ton, which are in the high 60s, low 70s on an all-in basis, but also on the per ounce net of the gold credit. Basically, this is another one of those mines where the gold pays for everything and the silver is effectively free. Even on an all-in basis, we're forecasting $1.36 per silver ounce. So it will become one of the lowest cost mines in the sector. Some upcoming catalysts for Terronera, while we're waiting for the final permits, and I should actually point out that we received the mine and plant permits over a year ago. And what we're waiting for is actually the dumps and tailings permits, which come from the Water Authority. We have a letter now from that Water Authority advising that the permits will be issued in hopefully the month of October. So we're basically now talking week to week as we wait for the Conagua to issue their final permits. Then we're going to try and finalize our debt package. The $76 million CapEx, we're going to do about 2/3 debt, so 50 million-ish of debt. We already have the first 30 million tranche in an accepted term sheet, and so we're working on the final $20 million. And we hope to bring that package of debt plus the permits to the board for a production decision before year end. While all that's going on, we're focused on revising the mine plan to accommodate the expanded reserves. We're continuing to tweak the crushing circuit, tweaking the grinding circuit, expanding the tailings to take the additional production. We are actually still tweaking the power alternatives. That's probably the biggest decision that we have to make between now and year end. Basically, a quick review, grid power. There's actually a power line that goes right across the proposed plant site, but it's only a 15 kVA line, so we would have to expand it. And we asked the CFE if they would be willing to twin the line, and the answer was no. So we're looking at putting in either our own 60-kilometer line from Puerto Vallarta, high tension line, which is big capex and at least 3 years, or we have a pretty compelling offer from a liquid natural gas provider for a turnkey solution where they would actually own and operate the facility. But of course, the operating cost is much higher. So it's a trade-off between capex and operating cost. We're still trying to make those decisions. And there's lots of upside to continue finding ore at Terronera. So that's the presentation, basically. In terms of our shareholder information, there's 128 million shares issued. We're listed on Toronto and New York. Great liquidity in the stock. It typically trades between 1 and 2 million shares a day, primarily on New York. Market cap, 300 million plus or minus US. And we're pretty close to the bottom of our 12-month trading range. Working cap at the end of the last quarter was almost $60 million. Cash was more than 30. Van Eck, the index fund, owns 9%, and Fresnillo, a strategic shareholder, owns about 2% of the company. We're covered by 8 analysts. And value drivers for the company, short term. Obviously, we felt it was important to announce that we're undertaking a 4-month cost-cutting program just to reflect the depressed metal prices. We do think the prices will bounce back next year, and so this is just a short-term effort to make our cash flow match closer to our model. Commercial production, we're expecting at Compas. We're developing the 2 new ore bodies at Guanaceví to turn that operation around. Advancing Terronera to a production decision. Expanding resources at a 6th project called Parral, which is another famous silver district in Chihuahua. So lots of news coming on that between now and year end. We continue to try and expand our project pipeline through both exploration and M&A. And we're still active on brownfields exploration. So why invest in Endeavour? Basically, we're a mid-tier precious metals producer proposing to become the next senior silver producer through the development of 2 new mines over the next 2 years with an experienced management team, a strong balance sheet, and we're a pure silver gold player. So thank you very much. Questions?
Yeah, we do have time for a question or two. I guess on the, you said that you're trying to, match the cash flow a little bit to the metal price environment, and there are some cost-cutting initiatives, and I think one thing you mentioned was contractors. Is there opportunity to make any of those types of savings permanent, or are those really things that can only be done on a temporary basis?
Clearly, the last time we did this was 2015, and some of those changes did become permanent. So yeah, we're hopeful that this opportunity to reduce costs and reduce actually some contractors' headcounts will not impact our production. In fact, we're expecting our production in Q4 to increase, largely due to the switch of mining methods at 2 of our mines to longhole.
Great. Are there any other questions? All right. Thank you.
Thank you very much.